Hi friends, today we will see accounting entries or journal entries for Ind AS 116 or IFRS 16 in the books of Lease. This is one of the important questions asked in the interview also. So let's get started. Here I have taken an example where the lease value is 12,000, lease period is 12 months, discounting factor 10%, monthly interest would be 10% divided by 12, so it is 0.83%. Now the next step is present value. What does present value says is what is today's value for rupees 12,000. To calculate the present value, we have two methods. One directly from the Excel formula, that is NPV, interest rate, and the lease rent. So 11,374. And the another method is tabular method where we can calculate with the help of present value formula. So the present value formula would be 1 divided by 1 plus R. R is the rate of interest and power n. N is a number of period or the term. So 0.992 is my PV factor. Now the present value would be rent multiplied my present value factor. So we will arrive present value. The next step would be calculating the interest. So interest calculation will be present value multiplied by interest rate. So 94.79 would be my interest. So we have calculated the what will be the lease rent for month. What is that present value, interest rate. Now the closing balance of lease liability. So the closing balance of lease liability would be the present value less interest minus the lease payment paid. So 10,640, 10,469. When you calculate in February, the interest will be calculated based on the closing balance of lease liability of January. So here you can tell closing balance of January multiplied by interest rate. So 87.24. So once we calculate it for 12 months, we have two checkpoints to check whether whatever we are doing calculation is correct or wrong. The first check is at the end of the lease period. So in my example it is 12 month. So at the end of 12th month my closing balance of lease liability should be 0. If you have any value here, it means that we are going somewhere wrong. So the first check is your closing balance of lease liability should be 0 at the end of the lease term. The second check is your present value total plus the interest total should be equals to your lease value. So in my example it is 12,000 and my present value and the interest has become 12,000. So it says that the calculation is good. Now we will see the accounting entries in the books of lessee. So first, as soon as the lease agreement is signed or the contract is active, we have to book a lease liability which is equals to our ROU, that is right to use of asset. So the first entry will be right to use of asset account debit. Why it is debit? It is an asset to the company, so it is debited. So the amount would be the present value and lease liability account credit because we have to pay to the lessor. So it is a liability to the company. So we are crediting, that is increasing the liability of the company. So at the end of each month, these three entries will be same. So the first entry will be recognizing the rent paid for that month. So what would be the entry? We'll see. So lease liability account debit. Why we are debiting means we are making the payment, we are decreasing our liability. So lease liability account debit, which is 1000, and we are crediting our bank account or accounts payable account. So it is 1000. So the next entry would be recognizing the interest expenses. So it is finance expense account debit, which will be your expense. So it hits to your P&L expense side. And lease liability, it is increasing. So 94.79. The last entry, which everybody almost forgets, that is depreciation. So here you can ask the question, why depreciation is booking in the books of lessee. So as the lessee is uh, have the right to use that an asset, so he can avail the depreciation also. So here for the depreciation I have taken present value divided by 12, that is SLM basis. So I have just divide by the 12 months. So my depreciation per month would be 9947.80. So these are all the simple and effective entries for lease accounting. Hope everyone got this. Thank you.